It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody. We got only a few days left of tax season 2018, and we want to help you get those papers and those questions out and give us a call. I just had a frog that landed in my throat. 803-0930, 803-0930, star 930. On a cell phone, you can text us at 3930. I'm Esther Gulius, the tax lady from EG Tax. Our offices are open tonight till 5. We're closed on Sunday, except for our main office at the McKinley Mall that's open during mall hours. Then all next week, 9 to 9, folks, we will be there bell to bell to help you with your taxes. There's a lot of people that owe money, that are filing late, who are confused. They look at the forms. They don't understand. Get them out. We'll help you. 803-0930, 803-0930, star 930 on your cell phone. And you can text us at 3930. And I have Tiffany Fabian. Hey, Tiff.
Hey there. Happy Saturday.
Happy Saturday to you, too.
Yeah.
So
Feels so good to be outside in the sun.
Oh, my gosh. Just to have the sun
Yeah.
is a wonderful thing. And then next week we're going to have snow. I have all these weather men and ladies that are my clients, and I say to them, why do you have such bad forecasts? They can't help it. Anyway, I'm Esther Gulius, the tax lady from EG Tax, 803-0930. 803-0930, star 920 on your cell phone. Our subject today is, what do you do if you owe taxes? So we're going to give you some tips, some things that you can do, what you should look at. Don't just send it in without a double check. If you think about it before you send in that money, to make sure that you've done everything that you possibly can, so that the money that you're sending in on your liability for 2018 is the correct liability, and then prepare for next year. It should be a wake-up call if you find out you owe money this year, that you have to do something for 2019 as well. So that's what we want to talk about. By the way, if people file an extension,
Right.
does that extend the time to do the tax return? To pay the liability?
No, ma'am, it does not. If you file a 6-month automatic extension and you have to pay what you owe to the federal and the state. But unfortunately, many people are under that false impression that if you do an extension, it can defer what you owe, and
Right.
it does not.
So you have to pay with your extension 90% of your liability that's going to come to fruition when you file that paperwork October the 15th. No ticky, no washy. So if you just are doing a mental mind game and you say, well, I'm going to file an extension and that's going to extend everything, it doesn't. You just are absolutely wasting your time. So you want to make sure that you sit down, do some preliminary calculations, so that you know when you file the Form 4868 or the IT 370 for New York State, that you're mailing off the money, sending off electronically the money that goes with that liability. Otherwise, it's for naught.
And, I always say to my clients, you're sitting there when you do an extension, you have to calculate your tax liability. So you're almost doing your tax return. So why not just go the extra way and do the whole return?
Now, here's the thing. So those of you that don't have the money and you think, oh, well, I'm just not going to file the return. Here's the problem. The failure to file the return penalty is 5% per month till it gets to 25%. The failure to pay penalty is only 0.5% per month. So when you think about it, 5% versus 0.5%, the big penalty is not filing the return. The little penalty is for not paying the taxes. Okay, so that's why it's so important that you get that return filed to avoid the 5% penalty that's growing every month until it gets to 25%. Now, think about it. If you owe $10,000, the penalty is like $2,500 in a few months. You want to file the return, and then we'll help you to pay the taxes.
Yep. Absolutely. And there's some people that I do that do married separate, and the one spouse maybe lives in a different state and they filed. And so the other spouse has to file married filing separate. And again, just file the return. And maybe they should look at joint too. You know.
Right, absolutely. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And you can text us at 3930. And we're going to go to the phones. We're going to talk to Dan. Hey, Dan. Hi.
Hi there. I had a rental property that I just bought in October, and I live in half of it, and I didn't rent the upstairs till February 2019. Do I have to do a Schedule E?
Was it available for rent? Were you trying to rent it, or was it not available?
In 2018.
It was not available.
All right, so then you're just going to take you're not going to be able to deduct any of the expenses for the business portion, which would be the rental upstairs, until it's actually placed into service. But obviously your property taxes and mortgage interest will still be deductible, but you won't need to do a Schedule E, and you'll set it up for depreciation starting in 2019.
And Dan, don't forget when you're doing the Schedule A to look at your closing disclosure, because there's some items on there besides your 1098 that you can take. So don't forget to bring in your closing disclosure or to utilize
once
that.
it's set up in 2019. The other thing is,
you could use it for 18 too, on the Schedule A, right?
well, he only if he has prepaid taxes. Yeah, prepaid
Loan
taxes.
originator.
But none of the closing costs are going to go to the
But I'm
to the
talking about
personal.
the
But it'll
origination
go
charges.
to the basis on the rental next year. Right. But that's correct.
Okay.
All right. And the other thing is, for those of anybody listening now, Dan, you have a personal residence, but what you might want to think about doing is placing that in an LLC, so that in the event that anybody falls down the stairs, that they won't sue you personally. So you might want to think about putting that rental in an LLC.
Or get insurance too.
Okay?
Yes, but the key is that it wasn't placed in service.
So it's next year.
If it was available to be placed in service,
All right. So let's say this situation. You got it all shiny bright, shining new. It's November. It's snowing. You put an ad in the paper. You got a sign out front. You put it in Craigslist. People come over, but they don't make a commitment. They say, I'll do it in February. I want to wait till the holidays. And you tried to rent it. Then the expenses that you incurred for the last 2 months that it was available for rent, you'd have to allocate them, percentage it out by the time that it was available, would be deductible even if you didn't have rent, if you really tried to rent it out.
okay.
It had to be actively ready for
Right.
rental.
Okay? Yes?
What'd you say? I didn't-
Capiche.
I said, are we good? You got it? Everything's good?
Thank you so much.
You're welcome, Dan. Bye-bye.
Congratulations.
And we have a rental book for those of you that that have rental property and you got little pieces and scraps of paper. We have a wonderful rental book
Or
if
our
you
app.
want to stop in our office, and we will help. It'll lay everything out each month, the rents and all the expenses, and it's so nice because there's all your stuff for tax
Or
season.
if you're inclined and you like there's an app that you can actually take pictures of things and load it up, and that's also a good way.
Now,
a
where's
good
the app
alternative. You have to go to the App Store, and it's in the App Store on your
So it's
device.
it's a rental book?
Yes.
What's it called? Do you know?
It's the EG Tax app.
Oh, you mean our app?
Yeah.
Oh, I thought it was a rental app.
It's the
Okay,
EG Tax app.
app. And it's free.
Yep, correct.
All right. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. Those of you that have rental property, really seriously, one of the great things about tax season is it forces you to think about your taxes. One of the things with taxes is, as a limited liability company protects your assets from litigation. And let's face it, Celino and Barnes and them guys are out there advertising nonstop day and night. And if there's something that happens, you want to protect your assets. So consider doing an LLC if you have rental property. All right?
That's
and we're going
right.
to go quickly to Dave in Lancaster. Hi, Dave. Hello.
have a question for you. I've been working on my son's income tax return. He's a college student.
Yes.
And he has earned income from a paid internship that he had last summer. He also has some unearned income from a scholarship that he received in the form of a check that was basically made out to him. So we already know that we have to fill out a Form 8615 and calculate the kiddie tax on that. My two questions are, the Form 1040 standard deduction worksheet, when you're calculating his standard deduction, because he's actually a dependent on my income taxes.
Right.
So it's at the bottom here with an asterisk. Earned income includes wages, salaries, tips, blah, blah, blah. And then it also says it also includes any taxable scholarship or fellowship grant. Now, I'm taking it that the word any means any and all, even if it's reportable on Form 8.
Well, it says a taxable scholarship. So you're going to report the scholarship, so it's taxable. So you're going to take his wages plus the taxable scholarship, and his standard deduction will be those two added together, up to $12,000.
Yes. Okay, so here's what the problem is, though. The scholarship was reported to him on a Form 1099 miscellaneous.
1099 miscellaneous non-employee compensation?
Yes.
What?
Yes. What happened was the grantor of the scholarship, it actually goes through a liaison at his college called, well...
All right, so
But
wait,
that means
all right,
he
I got to
wouldn't have
take a
pay
break.
he wouldn't have to pay the kiddie tax.
No, that's true. And so what we're going to do is we're going to talk about this. Can I ask you to hang on for like a 3-minute break?
Sure.
All right, thanks a lot. I'm Esther Gulius, the tax lady from EG Tax. We're going to take a short break. We'll be back on the other side. Hey, I'm Esther Gulius, the tax lady from EG Tax, and we're chatting with people that need some last-minute tax help. And if you need help, 8030930, 8030930, star 930 on a cell phone. You can text us at 3930, and we had a text, right, Tiff?
We do. It says, last week I texted about New York State not showing that I had a bill due when I do. I found out New York State doesn't show a bill due until after the 15th, and then there's penalties, and they said pretty sneaky. I got my payment in like you advised. Thank you for the good advice.
Good. Wonderful, wonderful. All right, let's
Yeah.
go back to Dave, who's got a conundrum. So let's go back to the 1099. Is it 1099 non-employee compensation?
No, it's Box 3, other income.
All right, that's good. So it's still a scholarship.
Yes.
So you get to put it on the wages line.
The only thing, though, how would the IRS computer equate the fact that it's a scholarship? I mean, the only thing I could think of doing is on 1040 Schedule 1, line 21, where it says other tax, I could fill it in there, scholarship from Form 1099 miscellaneous, and hope that the computer catches it.
Well, I mean, they're not going to match it up till sometime later. And if there was a question, they basically it generates a bill, and they send you the bill and say, this is not correct. At that point in time, you get to show all of your documentation that gives you an opportunity to dispute the way the computer computed it.
I see.
So I wouldn't go too crazy about it.
Okay.
Okay?
And do what you just suggested. I
Right.
think that's a good idea.
Right.
Okay.
Okay, Dave?
Okay, thank you very
All
much.
right, thanks for calling. I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Let's go to Mark in Buffalo. Hi, Mark.
Hi, first-time caller, long-time listener. I love your show.
Thank you, sir.
I have this new tax law is really confusing me. I have several rental properties. In fact, that's what I live off of. But I'm a sole prop. Now, first question I have is that $10,000? I mean, these are really business ventures. They're not.
Of course they are. Yeah. Mm-hmm.
I understand the same local tax on my personal house I live in, which is not a rental. But do you think all the other properties considered business? I'm not restricted to that.
All right. So
total.
you can, if you're treating your rental property as a business and you're not commingling funds, you have separate bank account, and you're spending at least 250 hours a year on them, then you would get the qualified business income deduction of the 20% of the bottom line as a pass-through.
I don't understand what you mean 20%.
The bottom line,
20 the profit after the expenses.
The qualified business deduction is 20% of the positive cash flow after your expenses on the rentals. It's called a QBI deduction.
So after all my expenses, I still get a 20% deduction?
Okay.
That's right.
So if you have a net profit, so let's say you have properties that are paid for, and your net profit is $100,000 on those properties
right.
after depreciation, $100,000, you would get a $20,000 pass-through deduction under QBI,
Okay. And
which is a lot of money.
it is. It is. I wonder
So-
if I was doing that. I assume he's a CPA, but I don't know. Okay, that's something I didn't know. Maybe it's been done. Now, I have a liability umbrella on each of the over all my properties, including my personal. I have a $5 million policy because I didn't want someone suing me and take
Right.
personal assets.
Right.
Now, the reason I did that is I thought that if I do a LLC or something else, I would pay tax on that, and then to get the money to me, I would pay tax.
No. It's called a disregarded entity. In other words, your LLC is going to be taxed just like your Schedule E looks right now. That's how it looks when it's an LLC. When a single owner LLC, that's the way it's going to be taxed. You're going to do a Schedule E per normal. The only difference is when they sue you, if they do, God forbid, they have to limit their lawsuit to the equity in your asset.
Because a single owner LLC is done just like you currently
just
do it.
Plain old per
Mark.
normal.
Yeah, the business assets. Not
That's right. It's not in a Schedule C. It's a Schedule E.
What do I have to have one for each property, or
Yeah, for each one you'd set up an LLC on each one, and the thing is, it's your tax return looks identically the same. It's the underlying bedrock of your rental property. Each one is basically, if they were to sue you, you kind of come to court and you say, this is an LLC. You can take the equity on this property, but you can't attach my other 97 houses.
So all right. So you have one LLC per property,
Right.
Okay. Doesn't that increase the insurance? Don't you have any insurance for each LLC then?
My dear, I'm not an insurance agent. I have no idea. I don't think so, but remember, this is a strategy to protect the asset. And what I suggest you do is contact your attorney and see what they say and give you some more detailed information, and talk to your insurance agent. But it's certainly something you should think about.
Okay, so the LLC. Now, should I have a separate bank account for each property?
No, you can have a bank account for your rentals, but you should not put your rentals into your personal. You would conduct it just like a business.
Okay, so I have one account for my personal, but I can have one account for all the properties.
Yeah, I mean that would be logical. Yes.
Especially
But if you
you're
wanted
doing
to,
the
you could pound that thing down and do one bank account per property. But I think that the IRS would see that if you have a rental bank account, can commingle the funds in your rental account, that would be considered business. And again, it's because of the QBI deduction.
Yeah, because I have 8 properties.
Yeah.
That would be very tedious to have 8 different accounts.
Sure.
Right. So
Absolutely.
just one account for all 8 seems to
Right.
make sense.
Okay, Mark?
Thank you very much.
You're very welcome. Talk to you later. Thanks for calling. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. And we're talking about what if you owe money. The other thing I wanted to talk about is if you owe money, and remember, it's 0.5% if you don't pay. It's 5% if you don't file. So you want to make sure your return is timely filed. if you owe money, some of the options are you can set up a payment program with the IRS. And don't you find them to be aren't they lovely at it?
They work very well at allowing you to do payment plans. You can actually e-file the payment plan, and you can pay it over 60 months, I think, and it's really reasonable. Of course, interest continues to accrue, but very easy to work with. There's a one-time setup fee. Unless your income is very low, then they'll waive the setup fee, but there's a one-time setup fee to set up the installment agreement, and they're really easy to work with. And if you have problems, you can come to the office and we'll help you do that.
And here's the thing. If you owe money, you need to really look at yourself in the mirror and say, now, is this a one-time problem? Did I sell a piece of property? Did I have a big capital gain? Is this something that is abnormal? Was this tax year abnormal? If not, if it's just an anomaly because of the change of the withholding charts last year, you need to think about what to do to fix it for next year, which would mean probably going back to your employer and changing your W-4 and eliminating some allowances on your W-4 so they start taking more out again.
Correct.
Because what happened last year, you want to tell them what happened
what
last
happened
year?
last year is the IRS government went in and changed the Circular E withholding tables, and so they were actually giving more people in their money in their paycheck, less being set aside in withholdings, and so that's what the conundrum is this year. And then also another thing that I'm suggesting to my clients is that they increase their 403B or their 401k contribution, because that'll also help with the answer at the end of the year too.
So the bottom line is you want to make sure that in 2019, if you're disappointed in 18, it's going to happen all over again if you don't do something. So the putting more money in the 401k, obviously if you owe money right now, looking at an IRA if you have wages or self-employment, or an SEP if you're self-employed, is another way to save the money on your side of the ledger to come up with the deduction so you don't owe as much money or no money at all. And you have till April the 15th to put that money in the SEP or the IRA. As a matter of fact, you can extend an SEP contribution till October the 15th if you do an extension on your tax return. So that's something else that you can do. The other thing is if you owe money this year is, and you want to make sure you set up a payment program, look at a loan. A really great place to borrow money is from your parents.
That's right. Or a lot of times I'll tell people to get a home equity line of credit,
which we're getting really tight on now because we only have a few days left. But, borrow money or many times people have the money in the bank, they just don't want to pay it. I don't want to make myself short, right? And so you're really paying a big penalty if you don't pay that liability, because there's interest and failure to pay penalties. So you want to make sure that if you have the ability to pay, you want to pay.
Yeah.
I'm Esther Golias, the tax lady, 8030930, 8030930, star 930, and we'll be back on the other side with Rick and your phone calls. The IRS is going to give you some respect if you get your taxes in by April the 15th and pay that liability. I'm Esther Golias, the tax lady with Tiffany Fabian. We're talking about what if you owe money and stuff that you can do to pull it out of the fire, because there is things you can do at the last minute. But more than anything right now, if you haven't started your taxes, get them together, because if you find at the end that you have a liability, it can be very painful coming up with that money. All right, I got to talk to Rick, who's been waiting for so long. Hey, Rick, thank you for waiting.
Oh, you're welcome.
What can we help you with, sir?
Okay, I had solar panels installed this year, 2018. And there's a tax credit that I'm supposed to apply to my taxes.
Right.
It comes to the amount of $7,368.
Uh-huh.
Now, I had my tax accountant do it, and we actually owe money. She's not familiar. She's not familiar with the tax code when it comes to tax credits for solar.
Well, then, Rick, you need to go take it to somebody who understands how to
Yeah,
use
there's
the
also-
credits.
There's one on the federal and also
and one on the
New
state
York.
as well.
So we should come and see you.
Well, you don't have to come see us. I mean, we'd love you to come see us, but I'm not saying that. Just to let you know that I'm telling you, not because you should come see us. You need to go see some professional who's well aware of taxes, because those credits should save you that $7,000.
Right.
And you have credits on the state as well. And the other thing is the accountant needs to understand that it would be what you actually paid, not what you, because a lot of times they give you those discounts. So what I'd suggest you do is go to a reputable firm, and we'll be very happy to help you, but you want to make sure you get it double checked.
We're
okay?
well versed in those credits. So if you wanted to come into one of our offices, we would be delighted.
And you're in
we'd help you.
Tonawanda, right?
Yes.
Our office is on Colvin Avenue, right down the street.
Okay.
1890 Colvin.
Yep, you can come in at any time. You don't need an appointment, and we'll help you.
Okay, Rick?
Is-
And Mrs. Rick, I heard her in the background.
Form for this credit?
What's the form number?
Yeah.
I off the top of
I'm
my head,
gonna
I
look.
don't know. She's going to look.
It's
but
not a
but she'll let
56.95.
you know. She'll let you know as we go forward. But if you need anything, give us a call. Okay, Rick?
Okay.
Thank you. Bye bye.
I know where it is on the tax return.
I do too. I don't know all the form numbers by heart. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930, and we got Mary in Akron. Hi, Mary.
Hi. Yeah, last year I didn't realize at work that I could have, they said I had to sign up to get the extra out. So they stopped taking the 401k contribution out, and I think it was in the first part of November. And I didn't realize it until after the fact because I wasn't paying close attention. So I didn't get the whole, because I'm over, a certain age that I can take the whole, I think it's $25,000 that was here. So if I donated more to make up that difference, would it decrease my amount of taxes?
Donate more to what?
To my 401k.
You can't now. It's the tax year's over
The
from
die
the
is
employer.
cast.
So the only contributions you can make now are to new 401ks for 2019, or if your income is low enough, you can put money into an IRA. Are you single or married?
Married.
Okay, and does your husband have a pension plan?
He has a 401k.
Okay, and your income is over 90,000?
Yeah.
Okay, so you can't do an IRA either. So it's just too late.
Okay. Pardon?
It's too late.
Too late.
Yep.
All right.
All right, Mary.
It's going to happen this year. Thank you.
Thank you, my dear. Bye-bye.
It is the 56.95
Okay.
for the solar
All
credit.
right. So Mr. person who called
Mark?
before us from Tonawanda, it's
56.95.
$56.95. Tiff looked it up for you. Okay, let's and before we go back to the phones, 8030930, 8030930, star 930 on your cell phone, 3930 if you want to text us. So we're talking about if you owe money, get a loan, home equity loan, which is also not deductible anymore except on the state. Borrow from a family member, sell some assets.
That's a good
I
idea.
mean, sometimes people have, a quad runner they haven't been on in 3 years sitting in the garage. You want to get rid of the bike. I mean, you want to pay the liability because you don't want to have the outstanding liability with the federal
You
and
could
state.
take a loan on your 401k. your
That's a great
403b.
idea. If you got a 401k, you can borrow against your own money and pay yourself back within 5 years.
Very good idea.
And
Yep.
so that way you can pay off the IRS, which is going to be much cheaper, and you're paying yourself the interest. Right?
Sounds like a win-win.
Let's see, and make sure you change your withholding right now for next year. And if you're retired, you can do it through your pension. You can do it through your Social Security. You can do voluntary backup withholding on your Social Security. And how do you do that, Tiff?
You fill out a W-4V and you print it off online. You could just Google the form W-4V and then you fill it out. I think they have an option of 5, 7, 15, or 20% withholding. And you could give us a call or anybody a call if you want to find out what percentage. And then you have to hand it into the Social Security Administration and you're good to go.
And then they'll start withholding. Because, your Social Security can be taxable up to 85%. So you want to make sure some of you are getting $25,000, $30,000, $40,000 a year in Social Security, And that's a lot of money that doesn't have taxes taken out. So you want to make sure you're proactive.
Or
now, on
there's
the state of
seniors
New York, that's tax-free.
Or there's
Yeah.
seniors that gamble and you have a big
Oh,
windfall.
the
If you-
gambling is the bad
then
one.
all of your, up to 85% of your Social Security will become taxable. And so you really want to be astute and pay attention to this.
So that's just some of the things. We're going to talk some more about this. 8030930, 8030930, star 930 on a cell phone. We're going to go to Ken, who's been waiting. Hi, Ken.
Hello.
How can we help you, sir?
We should be out in the sunshine.
We should. Well, we're sort of in the sunshine. We're in the back of the studio's got a big window. What can we help you with?
This K1 Part 11A, excess deductions. Now, I had conflicting information from the IRS whether it is or isn't longer deductible or whatever.
So is it a trust?
Yeah, if you look at Pub 529 on the right-hand middle column, on the right-hand side, they say it's no longer deductible. But then they got some bulletin they put out where, maybe it is. And on the internet, I'm looking, and I get conflicting information.
So let me ask, where the K1, is it a partnership? Is it a trust?
Fiduciary thing.
It's a fiduciary, right? So is it a termination deduction, final termination deduction?
An estate.
Right. And the estate is now closing, correct?
Yeah.
The miscellaneous itemized deductions are where business deductions go. It is my understanding that the termination deduction, which was never limited by 2% in the past, is still deductible. So that's my understanding. But right now, a lot of the code is very hazy, and they really aren't sure themselves what's going to be deductible.
Esther,
So what I'd suggest you do is do the return without it, and then do an amended return with it in, so that you keep it open and let the IRS make that determination themselves.
Oh, it doesn't just go on Schedule A, line 16, or
It would be miscellaneous itemized deduction, not subject to 2%. So that would be where gambling losses would be. My understanding is it's still deductible, though.
Oh, I wanted you to review that, and you just did.
Okay.
Thank you for doing that.
Okay.
in that thing in the back of the sheet for K1, they just say on where to do it, they say, see the beneficiary's instructions. Well, that's a cop-out. They don't say what they are.
Well, I will tell you there's a lot of haziness with the tax code because some of this stuff is so new, nobody knows exactly, and the regulations haven't been written. My understanding is that it is not subject to 2%, and so therefore it's still deductible. So if you're feeling bold, put it down there. Otherwise, file it without it and do an amended return and let the IRS make the determination.
Okay, when's the next flight to Mars?
Right now, I don't think there's anything leaving right away, but we'll let you know.
Okay, thanks.
All right, Ken, bye-bye. That's absolutely true. It can be really, really
Mind-blowing.
confusing. But
Earth-shattering.
that's one of the good things when you let the IRS know, where you're not concealing anything. You let them make the determination.
That was a really good idea. There's a tax person that said, New York State hasn't taken money from my account for taxes owed. Did return about 8 weeks ago. Does this mean they will audit me? Help. I'm thinking, you set a date for them to take the money out when you do an ACH debit. So I'm wondering what
It's
what
New
date-
York State, though.
Right, but you can set a date for New
Right.
York State, too.
So when we do the return, when we do our returns, we say that we want you to make this withdrawal on such and such a date. That's the date they'd make the withdrawal. So you need to look at your paperwork on your return that you filed and see what date you filled in. If you filled in or your accountant filled in April the 15th, well, of course they wouldn't have taken it out yet. April the 15th hasn't happened yet. Now, if you said you wanted it March the 8th, and it being April the 6th, then I would worry that the bank account or the routing number that was given on the tax return is not correct. And if that's the case, you want to get a voucher in to complete that payment before the 15th.
Yeah, what you take out is indicated on page 4 or 5 of the New York return. It's on the bottom. So make sure you filled it out completely, review it.
And double check that.
And double check it.
Right? All right. I'm Esther Golias, the tax lady from AG Tax. Our only office that's open tomorrow is our McKinley Mall office. It's open during mall hours. The rest of our offices will be there bell to bell all next week, including Saturday. We will get it done. If you need it done, we will get it done. The most important thing is get your stuff together. There's nothing worse than to find out that you owe $10,000 on April the 15th and there's no way to pay.
I agree.
And the other thing is making sure that you get ready for next year. Other things you want to make sure is double check if you find out you have a liability, double check to make sure that there's nothing that you can do to correct the tax bill. For instance, did you have a small business and you didn't claim it because you thought, oh, I didn't make any money? Well, if you didn't make any money, you are allowed a loss the first 2 years of the small business if you had a business intent. So if you had a business and you didn't make money and you didn't put it on your tax return, go ahead and put it on. Right?
I agree. Yeah. If you had, like that caller earlier, if you had a profit or that was ready to open for business, your shingle was up and you were ready, actively trying to make money, then put it on.
Right. Absolutely. Not everybody that puts a shingle out makes any money. So you could have lost money. Let's go back to the phones and we're going to go talk to Gordon. Hi, Gordon. How can we help you, sir?
Good afternoon, Esther. I had a question regarding the Obamacare exemptions, whether I'm eligible or not. I lost my job in April, so I was covered for 4 months the first part of the year, and then employment, and left with a bunch of medical copays that I had to clean up. I did manage to get coverage in December with the help of Tim Eliason. Thank you.
You're welcome.
Yeah, that's EG Health Connect.
Out.
Yep.
And
thank you.
So I was curious. There's a list of exemptions.
So let me just broadly ask you, why didn't you get health insurance? Was it because you didn't have any income?
Well, for the first 2 months, I thought I was going to get a job. And when I went to try and get something off the exchange, I had missed the open enrollment, so they closed me out. My COBRA offered by my employer was well over 8% of my gross income. And so I didn't know whether I was eligible under unaffordability or whether I should pursue general hardship or what.
Well, the bottom line is they really are fairly liberal with why people didn't get health insurance. The bottom line being if you couldn't afford it. So it sounds like if you didn't have a job and you had no other source, are you a gazillionaire and you had lots of investments, or were your wages your primary source of income?
Wages were my primary source.
And so you really didn't have much money after you lost your job. Is that correct?
That is correct.
So wouldn't you say that you would go under hardship?
That was my first thought.
That's what I would
think,
do.
Yes.
Okay.
I concur with you guys.
Right.
Okay, well, I'm going to pursue that route.
And I would be very surprised if they don't let it go
Can
through.
I tell you, Gordon, when the two easy exceptions are that you had short coverage gap and that your household income was greater, the cost of the insurance was greater than 8% of your household income.
Which he said it was.
Okay, but anyways, he's going to do the other exception, which is a harder, longer exception. So you have to fill out a form, and on the health insurance, you have to put pending. On the exception form, you have to put the 8695. You have to put pending
because they're going to make a determination. But have you ever seen them not?
I have never.
Seen them deny it. I've never seen them deny it.
Okay, so I should check the pending box then.
Right.
Well, yeah, and you have to fill out the form. There's
right.
a long form.
The 86, whatever it is?
No, it's a form from the health exchange. You can call my office and I can get you a copy of the form that you have to fill out.
Okay.
Okay, Gordon.
Fill that out.
Well, actually, you can just call Tim. He'll help you too.
Okay.
All right.
Splendid. You're the best.
Thanks, Gordon.
Thanks.
Bye-bye. It's very liberal. I mean, another exception is you missed. They turned off a
death in the family.
A death in a family. Somebody was sick. I mean, it's you stubbed your toe.
It's very liberal.
Very liberal. I'm Esther Golias, the tax lady, with Tiffany Fabian from EG Tax, 8030930. 8030930, star 930 on a cell phone. The other thing you can do is if you owe a lot of money, you can do an offer in compromise.
That's exactly right. Yep, which is a great alternative because there's so many people. Your back is against the wall, and you just don't know what to do. And so the government has an option for that, and that's the offer and compromise. And so you hear those commercials where they say you can pay pennies on the dollar. And so that's an option. And so you run all the numbers and you find out and you exhaust all your resources and you don't have many assets. We can actually present to the IRS, well, I'm making this offer. I owe you $45,000 and I can pay $3,900, and they come back and say, how about $7,000? And so it's a really good alternative. And there's one for the federal, and there's one in New York.
And Tiffany is our offer and compromise specialist.
That's right.
So you would be dealing with Tiffany, and basically you need 3 months of your bills, right?
You do.
Of your housing and your food,
the money
and your utility,
and all your expenses, your gas, your electric, your cable bills. We need 3 months of all your bills, and then we also need proof of the income in and 3 months of those bills too. And we put it together and we find out the determination, and it is really a good alternative when your back is against a wall.
Right. So that's another way. So these are all the options to use in the event that you find that April 15th is really, really bad for you. And I saw a report the other day that they anticipate an extra 2 million people owing taxes this year. So
with my
not so good.
My little sample, I see it.
Oh my gosh, it's so sad. I'm telling you. All right, and then we're going to go to the phones and talk to Judy. Hey, Judy.
Hi, Esther.
What can we do for you?
I want to clarify something. I went to Social Security yesterday, and my husband is going to be turning 65 in August.
Mm-hmm.
And she gave me the figure for this year and the figure for next year. If he retires at 66, she's telling us that he can collect his full Social Security and work his present job with no penalty.
That's correct.
Correct.
That's correct. Once you reach that magic age of 66, you can collect full Social Security and make $1 gazillion, and they're not going to make you pay back any of it. Doesn't mean it isn't taxable. It is taxable, potentially. But once you reach that golden normal retirement age, you are no longer under that restriction for wages of limiting to $17,400, like you would be prior to that time. So once you're 66, full Social Security, and you can work and make as much money as you want.
Oh, thank you so much.
You're very welcome, Judy.
Take care.
Thank you, dear. Bye-bye. Okay, I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. Now, the other thing is I want to get across is the statute of limitations is 3 years from the due date of a tax return. When that date happens, the 3-year period, all refunds are off the table. So on April the 15th, 2019, the 2015 tax year closes. So if you had refunds coming and you don't file your tax return by April the 15th of 2019, you can't get a refund anymore for 2015.
And that goes for an amended return, too.
This goes for amended return, too. So if you are sitting there and your children had wages and you didn't file their tax returns because you thought it was too little for them to claim. Yesterday, I did tax returns for kids that got $800 refunds, $400 refunds, $300 refunds.
Great for dependents.
Right. Children have done very well this year. So you don't ignore your children's W-2s, or maybe you just haven't filed your tax return and you don't feel like, well, you'd be giving up that refund. So understand that the tax year closes April the 15th for 2015. So you want to make sure you do that. And the other thing is double check your return. Did you do your Schedule D correctly? If you had qualified dividends, did you use the Schedule D to compute your tax liability? If you didn't, you overpaid your taxes.
Absolutely. Did you miss the QBI? Should you have filed joint and you did married separate? Should you have done an injured spouse?
Did you take the pension savers credit? Could you put money into the IRA and you didn't do it and you want to do it? Did you do the education credit correctly? Did you let your kids take it and you should have taken it? You can amend the return. Did you claim your kids? You maybe had kids in college and you thought, I can't claim them anymore. Bah, that's wrong. Can you itemize? People think they can't itemize. There's a ton of things. EG Tax wants to help. And in the meantime, if you don't know how to get in touch with us, go to our website at egtax.com. Ask the tax lady. We will help you. Till next week, we're going to be busy, and we want to help you. God bless you guys. Thanks for listening.